I'm Stephen D'Addario, and welcome to ValueGap. Today, I thought I'd take you through the platform, introduce you to it, and show you how you can use ValueGap to find quality stocks on sale and become a smarter investor. So let's get right into it. ValueGap was designed primarily, first and foremost, as a valuation tool. So what do we mean by that? A tool to help you determine what a company should be worth independent of market price. So let's backtrack a bit on that. Generally speaking, company value is equal to the sum of cash flows discounted to the present. So by looking at a firm's cash flows and layering on various degrees of uncertainty and volatility surrounding key financial variables, we can simulate cash flows into the future to arrive at a value of a company today. That is what ValueGap does. We run thousands of simulations of a company's cash flows based on key financial variables and business cycle behavior to arrive at a price of what that company's cash flows should be worth today on average. So how does that translate into the platform in terms of you, the user, you, the investor, to make informed investment decisions? So let's take a look at one of my favorite stocks in the market right now, Pepsi. First thing you'll know up, whether you pull up this stock from the search page or from the screener, which we'll get into a bit, you'll be showed the investment overview page, the financial snapshot. So in this page, the first thing you'll notice is the value gap. This is a measure of the difference or the gap between the estimated value by value gap based on a company's cash flows and what the company is currently trading. Positive value gaps indicate that this might be an opportunity as a value investor that you might want to look at, and negative value gaps obviously indicate the negative, the opposite. As a general rule of thumb, we like to say that value gaps above 20% should pique your interest, as we think that gives a sufficient margin of safety to look into that position. But nevertheless, let's drill down on this value gap. So if you click on this value gap, you'll see key financial variables associated with this valuation. So you have the revenue CAGR, you have the cost of capital, you have the tax rate, and you have the operating margins as a percentage of revenue. In addition, you have the sales to capital, which is a measure of capital efficiency. These key financial variables and the relative volatility surrounding them and the company's business cycles factor into the end simulation. For more information regarding the simulation, you can scroll down and head to the valuation and simulation section. It'll give you projected financials and the associated cash flows that yield our value gap. So one of the coolest features of value gap is that if you're not happy with any of the underlying assumptions that underpin a valuation, you can actually change them and rerun the simulation. There's nothing like this that exists on market. I can change the revenue CAGR. I can change the cost of capital, but maybe I think this is fine. I can change the operating margins, etc., the capital efficiency, and then put a narrative of a stock into a valuation story, run the simulations in real time, and we'll spit you out a value of what we think that company should be worth. You'll be able to see information regarding the simulations below, including the mean price, signaled by this vertical line, the relative revenue volatility embedded in this projection, and the mean revenue. Same thing with EBIT as a percentage of revenue or operating margins as a percentage of revenue. Now, one of the coolest ways that you can use this as an investor in value gap is you can actually change these values to get a market or to get a price that equals market price. So you can understand what's actually priced into a stock. There's nothing like this that exists on market. It's incredibly cool. So for example, we have Pepsi at a positive value gap. Let's assume that that this is true, and we want to understand what's priced into market. So perhaps you can play around with zero revenue growth, a higher cost of capital associated with the incremental cash flows, a higher incremental tax rate, maybe a lower incremental sales to capital, and rerun this simulation. It takes quite some time because they're very computationally intensive, but it'll come back to you and spit you out a price given these assumptions that company's cash flows should be worth. And then you can use this tool again to help you understand what is priced into market to make smarter decisions as an investor premised around valuation. As a value gap subscriber, if you have a target on Pepsi at around 200, when it hits 200, you're looking to maybe trim. Whereas without value gap, you don't really have that valuation anchoring. Your ability to make informed investment decisions are substantially lower. So that's looking at value gap as a valuation tool. Again, incredibly cool. We use this every day. It's powered our fund. It led us to invest in airlines, home building companies early on in the 2023 cycle that we've earned outsized returns on. Again, we follow the value and make investment decisions accordingly. But in addition to ValueGap as a valuation tool, it can also be used as a financial research tool. So on the financial overview page, you can gain a snapshot of 12 trailing month operating achievements or operating performance. You can gain access to key financial variables as percentages of revenue, revenue growth, gross profits, operating incomes, SG&A, net incomes, etc. And this is all just to give you a snapshot of the company in real time to very easily see visually how the operations of the company are progressing. We also have information regarding samples from our simulation. So if you want to see individual runs, how they behave to get an understanding of what we're pricing into the company, we have that. We also have trailing multiples. So you can see how a company has traded relative to its earnings historically. So for example, PepsiCo here is, with the exception of 2019, when I believe they had an outsized income that year that was non-recurring, but nevertheless has very seldomly traded below 20. Well, the current PE is on the lower end of this range. So if that is a valuation signal for you, you can act on that as an investor. We also have revenue and net income forecasts from analysts. So how can we use this? So for example, if you have a company with increasing revenue and increasing net income in terms of what's being forecasted, but you have a share price that implies zero growth, and again, you can verify that through the custom simulations, you probably have good asymmetry there. And that's just an example of how we loop that in. We also have capital structure, so you get to see how much debt and equity is on a company's books. And then we also have shares outstanding. So you get to see how share counts have changed over time. Are they diluting shareholders? To what extent are they diluting shareholders? And so forth. And last but not least, we have a price chart for the stock. In your profile settings, you can actually move this up to the top. I prefer to see it at the bottom just because I prefer to know about a company's operations before their price. But again, we give that option to our users. So in addition to the financial overview page, we also have a couple of other pages to assist you and a couple other tools to assist in financial research. So our financials details page takes a little bit more in depth in terms of financial metrics and sort of plots those out each year with various trends. So you can have return on invested capital, capex to depreciation, dividend yields, days of inventory, et cetera, et cetera. That give you more information regarding the company. In addition, we have annual and quarterly filing. So as a value investor, you can use these to gain an understanding about the company. You can use AI-assisted summaries to summarize these 10Ks. And these are very robust summaries in the sense that they do not only feed the entire PDF in and expect to get a robust summary. That's not how AI works, but it does a section-by-section summary according to how 10Ks are categorized to yield a very robust and comprehensive summary that we use very much internally. And the same is available for quarterly reports as well. In addition, we have our earnings transcripts, so you can pull up individual earnings transcripts. You can summarize earnings transcripts, again, using AI. What you can even do is you can compare earnings transcripts. You can compare, Q4 results this year with Q4 results last year. Is the company doing what they said they were going to do? Have they kept their word? How is the cadence of how the company's talking about themselves? Things like that. How are those evolving? And again, it's all just to gain a better understanding of the company behind the stock. That is ultimately the goal of what value gap financial research is there for. It's about to sort of supplement the price information that you gain out elsewhere. In addition, if you add a company to your watch list, which can be done with this little icon beside the value gap, they will have news appear in your newsfeed. So, for example, I have Google, I have Crocs, I have PayPal, I have Microsoft, I have SoFi, Pepsi, Builder, etc. And you can use this as a portal to sort of see news for your favorite companies. In addition, if you're looking for stocks to pull up on ValueGap, we have a phenomenal screener that we just launched out of beta. that you can use to drill down on various financial dimensions, sort by value gaps or sort by sort of auxiliary factors that we've used internally to find some phenomenal stocks to take a look at and to conduct further research on. I want to thank everybody for watching this video, signing up for Value Gap, and we hope that you find some quality stocks on sale and ultimately become a better investor. So thank you so much.